If you had $100,000 to invest, I'll show you what you could turn it into. So Ben, why are we making these videos?
Today, we're making these videos because we think that it's important for people to be educated, because an educated investor is a good investor. But more importantly, folks, this is your hard-earned retirement money. You need to understand what you're investing in, and we're going to walk you through that today.
And on top of that, we spent years and countless hours learning how to invest in real estate, what to do, what not to do, and what mistakes to avoid. And we're here to help share that with you to help you become a better real estate investor.
If you have $100,000 today and you're investing in our latest project, which is the Texas 3-pack, you're going to look at the slide, you're going to say, okay, what's going on here? Well, let's focus on cash on cash. And what is cash on cash? That is the dollar amount that you're getting on an average annualized basis every year in your bank account based on a $100,000 investment. So if you look at year one, right, you got 3.49%. So you're going to get $3,400 each year, or that first year, right? Second year, you're going to obviously going to increase. So it's going to be 5.7, right? Then it goes to 7.27, right? So all that adds up to an average cash on cash of 7.7 on this specific deal.
The reason it ramps up, right, is we do what's called value add investing. Whenever we buy a property, we look for ways to go in and improve the property. Typically, we're injecting $1, $2, sometimes $3, $4 million back into the property to make it a better, safer property. And really, that starts to drive the NOI, which gives us more cash to be able to distribute to the investors. But like Ben said, the cash on cash is fairly healthy. And the other thing to highlight too is return of capital, right?
Yep.
That's the question that we get asked about. When do I get money back?
So in this specific example, right, you're going to get your $100,000 back in year 7. That's when we're going to sell the property. And then on top of that, you're going to get profits from the sale. So not only did you get cash flow throughout the hold period, holding on to the property each month, right, you're also going to get net proceeds from the sale too, right?
So really, there's 3 sources of income. There's the cash flow during the hold, like Ben said. There's the cash back that you initially invested at the sale. And then there's profits on the sale. And that together combined is ultimately what we look for that gives us the total returns for an investor. And whenever we look at average annualized, we say, hey, how much did it make? And divide that over how many years it took.
Yeah, so in this specific example, almost 17%, folks. And if you really look back at the historical S&P returns, that's the stock market for those that don't know what that is, you're getting probably 6 to 8%. So well outperforming the stock market.
So far for this slide, we're talking about what happens on a sale. But Ben, if we did a refi, what happens for investors?
So the refinance is actually kind of fun, right? So whenever you go to refinance a property, right, you're going to put new loan on it, folks. And so you're going to be able to pull money out based on that higher valuation. So of that money, let's say you get 100% of that $100,000 back, right? Now what are your returns?
Infinite.
But infinite
Money in my pocket where I don't have any money out there. I've gotten all my money back, yet I'm still getting money in. And so for those of you that are math inclined, that divide by 0, which gives you an error, and therefore
love it. And you still retain ownership in the existing deal and continue to get cash flow and get net proceeds when we go to sell it. That is the power of commercial real estate.
That's one of the type of investments that really we have as its own type of investment. We call it a legacy investment, right? Where we can get into a deal, do a big refi, pull all the investors' money out. They've gotten their money back. And guess what? We're all still getting those distributions.
So Ferris, if you have $100K, but you want to invest it in residential, what are the differences between residential and multifamily?
First and foremost, you can only buy something up to $400,000 typically, right? You're getting that 25% down. What we do, we syndicate the equity, right? We pull together a lot of money, go buy a much bigger, better asset. And that allows us to have full-time staff, right? That allows us to buy better locations typically. And more importantly, right, you can get more creative. It's really valued based on how much income is the property producing. Problem with a house, right? My house is never going to sell for much more than the neighborhood, right? And that's based on the houses and
the comps.
Yeah, whereas in commercial real estate, it's actually based on the value that is produced in the property, right? That income, and that is what drives the valuations up. So much better asset, much better investment opportunity. First, how does a person get started?
So if you're interested in investing that $100K, you're going to fill out some paperwork, you're going to sign it, and then you're ultimately going to wire transfer your $100K in.
Super easy, right? And usually those minimums are $100,000. So second question, who is a typical investor?
So we've got typical investors that range from business owners to doctors to lawyers to engineers, right? You know, I mean, typically they're going to be high income earners that have $100K that they want to diversify in multifamily.
Usually those are people that are looking to build long-term wealth, right? It's not a get rich quick game, but you do build wealth over time. And it might have IRA investments, 1031s, or some other mechanisms.
All right, so you got some value from today's videos. So Ferris, what do people do next?
So go to disruptequity.com, click the Invest With Us button, or send an email to our team at disruptequity.com. We'd love to hear more from you. Know if you liked the video, what else you'd like to see coming up.
And don't forget to share, like, and comment on this video if you enjoyed our content today.